Hey everyone, welcome back to The Explainer. So it's June 2026, and right now the financial markets are serving up a truly fascinating, literally textbook paradox. On one hand, you've got the broader indices just printing record highs. But on the other hand, the people with the absolute deepest visibility into the economy, we're talking corporate insiders and lawmakers, are quietly making some massive shifts in their portfolios. Today, we're going to track exactly where the smart money is flowing, and honestly, more importantly, where it's fleeing. Okay, let's dive into this, because this is the central mystery we're decoding today. If things are so undeniably great and retail investors are just aggressively buying the top, why are the most informed actors cashing out? Are they seeing a recession coming, or are they just taking chips off the table? Well, by using the direct SEC filings and congressional disclosure data from just the past week, we're going to reconstruct the smart money's playbook, step by step. Here's our quick roadmap for today. First, market highs, insider sells. Second, Congress rotates out of tech. Third, Capitol Hill's value plays. Fourth, massive insider buying signals. Fifth, insiders cashing out. And finally, number 6, the next market catalyst. Don't worry, we're going to decode all these macro trends and specific stock moves crystal clear. All right, jumping right into section 1, market highs, insider sells. And this brilliantly illustrates the sheer scale of the macroeconomic paradox we're seeing right now. In the first week of June 2026, the S&P 500 notched its 6th straight record high. The Nasdaq, it's on an 8-day winning streak. We literally had all 3 major indexes close at all-time highs simultaneously for the first time since early in the year. Yet against this backdrop of just extreme market euphoria, corporate insiders are selling their own stock at a heavily bearish 4-to-1 ratio. For anyone new to this metric, when the people running the companies are selling 4 times as much stock as they're buying, it's a huge signal. It heavily implies they believe their own stock prices have peaked and it's time to take some profits. Looking at the raw data for the day, we tracked 68 distinct insider sells, worth nearly $30 million, compared to just 37 buys. Now, an aggregate ratio of 4-to-1 looks pretty terrible on the surface. It screams that the smart money thinks the top is in. But we don't just look at surface-level data. We're going to act as detectives here, isolate the noise, and find the high-conviction hidden signals inside this data to see what the smart money is actually doing. Which brings us to section 2, Congress rotates out of tech. So the crucial point is how we actually analyze these congressional trades. We use a concept called contextual proximity. Basically, we impartially rate the signal strength of a politician's trade based entirely on their committee assignments and oversight roles. And right now, we're seeing a coordinated trim of tech and financial exposures among highly positioned lawmakers. For instance, Senator Sheldon Whitehouse, who sits on the Budget Committee and is super vocal on AI regulation, he just sold up to $250,000 of NVIDIA and Oracle. Representative Auchincloss, sitting on the Financial Services Committee, completely exited his position in State Street, which is a massive custodian bank. And Representative Ro Khanna, who actually represents NVIDIA's home district, has been selling off Micron and Palantir. Neutrally speaking, when lawmakers with this much contextual proximity trim these very specific sectors, it's a really strong signal of potential regulatory or valuation concerns. What also gives these trades such high signal strength is the speed of disclosure. Take Senator Whitehouse's NVIDIA sale. The trade was executed on May 8th, right? And then filed on June 2nd. Under the Stock Act, lawmakers have 45 days to report a trade. Filing well ahead of that deadline, just 25 days later, acts as a moderate bearish transparency signal. It's timely, decisive action taken right near the stock's all-time highs. And let's be honest, politicians rarely do things ahead of a deadline unless there's serious money on the line. Moving right along to Section 3, Capitol Hill's value plays. So if members of Congress are taking their chips off the tech table, the next logical question is, where exactly is their money going? We're actually seeing clear, deliberate rebalancing into defense, cyclicals, and specific infrastructure. Representative David Taylor executed a major portfolio overhaul, buying Home Depot, Parker Hannifin, and crucially MedSpace. Now, MedSpace is a clinical research organization headquartered right in his home state of Ohio. Buying a home state company is a classic congressional pattern, indicating high local confidence. Meanwhile, Representative Byron Donalds initiated a new position in Marvell Technology, deliberately shifting from pure play AI into AI infrastructure, alongside a defensive growth play in Eli Lilly. We rate these as moderate bullish signals because they show very clear thematic conviction. And then we have Representative Ed Case, who just disclosed a fresh purchase of Apple. Now, Apple is the most widely held stock in Congress, so normally, this wouldn't raise eyebrows. However, initiating a brand new buy right before Apple's critical WWDC 2026 event, where they are expected to unveil massive new AI features, is a classic catalyst conviction move. It's absolutely something worth tracking. Let's shift gears to Section 4, Massive Insider Buying Signals. Now, what's really interesting about this is that we're moving from Congress to actual corporate executives. Because when CEOs and directors open their own wallets to buy shares in the companies they run, it just cuts straight through all the macroeconomic noise. Look at the sheer undeniable scale of this number, $20.3 million. That is the exact amount that Director Paul Fribourg just dropped to buy shares in his own company, International Flavors and Fragrances. He increased his personal stake by 11% in a single day. When a board member with full, unhindered visibility into the business trajectory deploys $20 million at current market prices, that is a 5-star extreme bullish vote of confidence. And Fribourg isn't alone. Look at these multi-million-dollar bets hitting the tape this week. The CEO of Miniso Group bought $6.9 million worth of stock. The CEO of Brayer Holdings increased his stake by 600% with a $5.7 million buy. Charles Schwab's new CEO just put $1.8 million into his own firm. And perhaps most telling for growth investors, we saw simultaneous dual insider buying at Kava Group, with both the chief operating officer and chief legal officer taking large positions. These kinds of coordinated, high-dollar value executive buys completely defy the broader market's bearish insider ratio. But we have to flip it over to Section 5, Insiders Cashing Out. Because when the people who know their companies best start cashing out not just millions, but tens of millions of dollars, we absolutely need to pay attention and raise the caution flags. Here are the top caution flags of the week. Best Buy's chairman emeritus sold $38 million. Micron CEO sold $36 million. Netflix co-founder Reed Hastings dumped $33 million worth of shares. I mean, these are not small, automated tax withholding sales to cover basic executive compensation. These amounts represent serious, deliberate profit-taking at highly elevated market levels. Let's focus on that Micron sale for a second. The data source explicitly points out that despite the NVIDIA-like AI narrative, Micron CEO is taking $36 million worth of chips off the table. This is a classic, textbook example of sector rotation. When the CEO of a major semiconductor company sells into the AI hype, it's a massive warning flag for tech valuations across the board. You really have to ask yourself, what does the CEO see coming down the pipeline that the everyday retail investor doesn't? Let's move to and see how this builds into Section 6, the next market catalyst. So with all this insider selling in tech, the market is desperately looking for fundamental validation. And that brings us to the upcoming binary event that could very well decide the market's near-term direction. Broadcom's Q2 earnings report hits after the closing bell. This is being framed as the ultimate test of the whole AI narrative. They're projected to report $22 billion in revenue, with AI revenue specifically guided to grow an astonishing 140% year over year. So here is your exact actionable takeaway sup to watch for at the closing bell. If Broadcom delivers a beat and raise, analysts imply the stock will push past $480, dragging the broader semiconductor sector into another massive rally. However, if they miss or offer weak forward guidance, the stock could easily correct down to the 410 level, potentially triggering a broader tech sell-off. And get this, the options market is currently pricing in a massive 8% volatility swing either way. Which leaves us with this final burning thought. In a week where corporate insiders took over $165 million off the table in a single day, and Congress quietly rotated out of tech and into value, will Broadcom's earnings fundamentally validate these market all-time highs, or is this the catalyst that finally triggers the great rotation the smart money seems to be preparing for? Thank you so much for joining me today. Keep your eyes on that smart money data, and I'll see you on the next explainer.
Thank you for watching. Please like and subscribe to our channel.